Hello, I'm Hao Yang. Tesla has been around since 2003. It's an international company in the USA focused on new energy vehicles and energy. Based on Tesla's financial information, we know that in 2021, Tesla's general picture is as follows. Credit ratio 1.38, total assets turnover 0.942, return on equity 0.211, debt ratio 0.492, based on which we can gradually judge that Tesla has good growth prospects. Tesla has built 6 Gigafactory. What we want to study is the Shanghai factory in China. Tesla signed a deal with the Shanghai government in 2018 and invest about 3 billion to build the factory. The Shanghai plant, which mainly produces the Model 3 and Model Y, is aimed at increasing production of new energy vehicles and expanding Tesla's market in China. In order to form a contrast, we set up two alternative schemes, A and B. We made the cash flow statement according to the financial situation of Tesla, calculate the feasibility of project, and judge which scheme could bring more profits. Then, do more in-depth analysis of this scheme, such as project risk assessment, to carry out more perfect understanding of this scheme.
Hello everyone, I'm Yang Kaichen. Next part I share is the cost cash flow statement of the project. The cost table contains the mean cost evaluated the earlier stage of the project and marks the objects to be adapted. The total cost of the project is a $1.58 billion. We also distinguish between multiple and immutable assets. In the table, the cost of lead, construction costs, and other fixed asset investment is a $1.05 billion. And the risk is a variable cost that may be affected by future development. Based on the determination of operating costs, depreciation and interest on debate, it can also be inferred that the total upfront instrument cost of the project is a $1,573 million. This is based on a 60.5% match and a total expression of a $1.43 billion. In the progress, we introduced the inflation rate of 2.1%. The project is expected to become performed late in the 2029, 6 years after the project begins. At such point, the project's net profit will be a $539 million. Upon completion, the project is expected to generate a net profit of a $3.37 billion. From a long-term perspective, the project is a promising one.
As shown in the table, we selected 4 viability indicators and calculated them with the data in the cash flow statement. For ease of calculation, we set the nominal interest rate at 0.1231. PV is the length of time needed to recover initial cash outlay on the project. By computation, the mine project will be recovered within 6 years and takes less time. NPV is the algebraic sum of the present value of net cash flow for each year. Through the calculation, we got the NPV of mine project, alternative A and alternative B is about $6,959 million minus $356.5 million and minus $13.2 million. The value of alternative A and B's NPV is negative. That means the evaluation of the two alternatives are not feasible with NPV. The mathematical meaning of IRR is the discount rate that let NPV equal 0. It means the expected rate of return on investment. The larger the indicator, the better the investment. The value in the table shows the mine project's IRR larger than B's and B's IRR larger than C's. LCC refers to all costs related to the products in the life cycle of product in Comunic. LCC is not relevant to the revenue to the project. From the table, we can see the main project's LCC is not the smallest. In summary, although main project's LCC is not the smallest, the NPV indicates that the other two alternative projects are not viable, and main project's PB is the smallest and its ARR is the largest. So in general, the main project is the best scheme and it can bring considerable income in the evaluation.
In order to observe the impact of unreal uncertain factors on project operation, we conduct risk analysis, including qualitative analysis and quantitative analysis. For some external risks, such as natural disasters or policy change, whose impact cannot be measured with specific and accurate numerical values. This part mainly uses qualitative analysis. As for input variables with accurate values within the project, such as sales price and investment, quantitative analysis is used in this part, specifically sensitivity analysis. In our qualitative analysis, we identified 7 types of risks as shown in table. Then we made the probability and impact matrix as shown in the figure. From the matrix, we can see that COVID-19 is the risk with the highest probability and the most serious impact among the 7 risks. But the Chinese epidemic prevention policy is also very strict, so the company cannot worry too much. Compared with it, other risks had relatively little impact on the project. In the quantitative analysis, our discussion, we believe that investment, discount rate, sales price of 2 models, and salvage value have a great impact on the project. Taking NPV as an example, we observed that the variation of NPV by changing the value of one of the above variables each time, and then drew the sensitivity graph. As shown in the figure, it is not difficult to find that this project is most sensitive to the price of the 2 models, especially the price of Model Y.
Hello, I'm He Kai. The center price of current project is the production of the Model 3 and the Model Y and Tesla's Gigafactory. A project with a positive net present value means that the value of the company is growing over the long term. It can be concluded that the project is feasible. From the risk analysis section, 2 major risks are the inflation and the coronavirus 19 pandemic. We assume that the inflation rate is constant over the next 17 years and about 2.1%. If capex increase, IR may be lower. Considering about the inflation, it is necessary to increase selling price, especially Model Y, so as to increase the availability of the project. Due to the location of Tesla's Shanghai Gigafactory, the project is likely to be affected in coronavirus 19 pandemic. On the one hand, the factory may consider people's health and shut down for a period of time. On the other hand, the cost of materials may change with time. Therefore, it is recommended that all materials and extra labor be purchased at a fixed one-time price. This is our reference list. That's all. Thank you.